Oh, Chase, you're going to get me in trouble one of these days. New tariffs are in effect now. And this morning, in fact, China and Canada already retaliating. That's leading to more uncertainty on Wall Street. Chase Wilsey, I defer to you. Here we go. Vice President of Wilsey Asset Management. Good morning.
Good morning.
What's going on?
Well, I mean, where do we want to start?
I don't know. I want you to talk to the people, because people, in all seriousness, they're very concerned. They're very worried about their 401k. So what do you have to say to someone worried about their 401k during, let's call it this time and whatever the heck is happening with all the volatility?
Yeah, so there's two things I want to say here. I mean, number one is kind of a broad approach. Number two is going to be a more kind of targeted approach as to what's going on with this situation. And I've been talking about this for quite a while now, about my concerns over the valuations in the stock market and how things just got too expensive and how I thought we were ripe for a pullback. And it is obviously kind of coming to fruition here. But if you have a good plan in place, you shouldn't panic. That is a big mistake. If you hold the wrong things in your portfolio, again, I am not a fan of, let's say, Apple. I think Apple is going through some big issues, and they were way expensive to begin with.
Yeah.
And Apple is a big part of the stock market. Yeah, you might want to consider making some adjustments here. But if you have a good plan in place, it seems everybody's just selling everything right now. Don't take part in that. The big thing I tell people is a bear market, which is defined by a 20% pullback in the stock market. We did see that technically. We did enter bear market territory. And that sounds concerning, but the big mistake people make is they panic and they sell. If you look long term, you go all the way back to 1928, the average time for recovery from a bear market is 2 years.
2 years, right.
Now that sounds like a long time, but think about this. Let's say you sell today and you go to cash. What does that mean? You're going to get maybe 2-3% on your money for that time period. It's going to take you 7, 8, 9 years to recover. You can't panic and go to cash at this point in time, because that's where your recovery really becomes extended here. So I tell people, make sure you have a good plan in place. We'll get through this. If you don't have a good plan in place, yeah, you're probably going to have some issues here, but don't go to cash. That's a terrible mistake.
And I think it's for times like these that you're always preaching diversify, and it's all the timing and being smart about it. But then there's the argument nowadays that's going around where, what if somebody planned to retire right now? Or in the next month or two, they've had this planned out for a long time to count on that 401k, and all of a sudden that 401k, they're looking and it's worth maybe half of what it was. What do you say to those people? They can't retire now? They have to work another 2 years? Maybe they don't have that. It's all timing. This was their time to retire. What do you say to those folks?
I mean, potentially yes, potentially no. It really depends on each individual situation.
Of course.
But the thing I was kind of talking about before I came on here was, people sometimes, they get selfish with the returns, essentially. If you look back over the last year, with all of this craziness happening, the stock market's down somewhere around 4%. So yes, we've pulled back a lot in these last few days, but we also went up a lot before then.
Yeah.
So people that were planning on retirement 3, 4, 5 years ago, let's say, you had a huge run up. This pullback shouldn't necessarily be impacting your retirement plans. And if you come up with a good income strategy, the issue is if you sell everything right now, you're not going to be able to retire. I'll tell you that right now. But if you have good investments, there's no reason you can't retire if you still have the funds to generate income from your portfolio. So it's really going to be dependent on your situation, but I don't think this should change your retirement plans.
Human psyche, man. If I was up here, no matter what my gains the last 5 years, if I got up here and now it's just down here, like, oh man, but I was just here like a couple months ago. What can people do if they want to minimize the risk during this period of uncertainty? We talk about diversifying always and avoiding some of the suggestions you said. What do you do to minimize that risk right now?
I look at, again, I'm going to pick on Apple here. They have a huge tie to China. And I really believe these trade wars, these trade talks, obviously it's so prominent in the news right now. But I look at it and I say, well, I think a lot of these countries, we're going to start working through various deals. And I think we're going to get through this difficult time. But the last two areas of concern that I have, I think China and the EU are going to be the last two to fall. Apple, I pick on them because they have a huge reliance on China. Companies that have a huge reliance on China, I'm a little skeptical of right now. I would say kind of pull back on that risk appetite if you do have ties to that country in particular. And again, you talk about diversifying the portfolio, the main strategy that I deploy for my clients at our firm, it's called a value investing philosophy. And generally it holds up much better in these types of situations. And we've seen it year to date. We've done better with the value approach, or a good value approach, I should say, has done better than the stock market, than these crazy tech companies. That is where I tell people, stick to a sound value investment philosophy, and I think you'll weather this just fine.
Is this a correction or a crash?
I hate to use that word, but I mean, you look at it over the last 5 days, the market has crashed. There's no denying that. I mean, we're now hit bear market territory in the S&P 500, in the NASDAQ. We've gone past correction territory. Now, the big thing I want to be careful of is defining that as a crash. I really don't think long-term this is going to be a problem.
You don't?
I still believe that you look back at like COVID. Remember the banking crisis, right? Everybody's panicking about that. I think we're going to look back on this next year, and it's just going to be a blip on the radar, essentially. And I don't think it's going to cause like a financial crisis at the end of the day.
All right, Chase Wilsey, thank you as always for the expertise.
Thanks for having me.
We'll be speaking again for sure.
I'm sure.
Thank you, Chase.
Fox 5 Weather.